Hello traders, welcome to another global macro update. In this video, we're going to be talking about two positive news stories. One talking about Bill Gates creating vaccines, actually 7 different potential vaccines to actually fight this COVID-19 virus. And then we're going to talk about Trump discussing potential fixed supply or a reduction in supply or some agreement where they have the possible ending of this trade war or this oil price war against OPEC and Russia. So first things first, we're going to go into the post for Bill Gates. We see Bill Gates is funding new factories for 7 potential coronavirus vaccines, even though he'll be wasting billions of dollars. So basically, he's only going to pick 2 or 3 of them, but he is putting his money towards something that'll help humanity, really. So yeah, he's a really significant philanthropist in the world. So let's go in this blog post. Bill Gates is plugging money into building factories for 7 promising coronavirus vaccine candidates, even though it will mean wasting billions of dollars. On Thursday's episode of The Daily Show, the Microsoft billionaire told the host Trevor Noah his philanthropic organization, the Gates Foundation, could mobilize faster than governments to fight the coronavirus outbreak. Yeah, no surprise there. Governments are pretty slow for sure. Because our foundation has such deep expertise in infectious diseases, we've thought about the epidemic. We did fund some things to be more prepared, like vaccine efforts, Gates said. Our early money can accelerate things. Yeah, it definitely can. Gates said he was picking the top 7 vaccine candidates and building manufacturing capacity for them. He said, even though we'll end up picking at most 2 of them. So he's creating 7 and he's only really picking 2. We're going to fund factories for all 7 just so that we don't waste time in serially saying, okay, which vaccines work, and then building a factory, he said. And then I think that's the end of the article. Just we can see the actual time frame that we're thinking of, which Gates think could take up to 18 months. So yeah, it's a long time frame. Obviously, you have to actually construct a building, and then you have to work on actually testing these 7 different vaccines, right? And then you got to go through the 3 different phases. The first phase is just testing amongst healthy human beings, and then your phase 2 and phase 3 are going to be testing the efficacy of the drug to see if it's actually going to be helping with this virus. So we'll see how it goes. We'll keep you updated. It's obviously going to take a long time. 18 months is nowhere close, but yeah, these weeks go by pretty quickly, but at the same time, it's really only been like a month and a half, really, or kind of let alone a month for when the carnage really started. So yeah, it's moving really quickly, but people who have a lot of capital are putting their money to good use, it seems like, and allocating it towards areas that will potentially help the human race. So the next blog post is going to be talking about Trump and the energy sector. Hopefully that they're going to come to some sort of agreement. First, we're going to get a little bit of coffee, and then we'll continue on. Philanthropic. Yes, I believe I said that incorrectly there. All right. Trump vows U.S. energy sector will come back as he sees Russia-Saudi oil agreement. And we'll get into the charts very shortly here. But basically, I want to quickly sum it up here. President Donald Trump on Friday met with the chiefs of major oil companies and vowed that the U.S. energy sector will revive, and he reiterated he saw Russia-Saudi Arabia deal over oil production in the offing. Let me just look here. I think they spelled that wrong. But yeah, anyways, at the end of the day, he's talking with the people that really matter in terms of the supply, and then Trump told the executive that President Vladimir Putin of Russia and Saudi Crown Prince Mohammed bin Salman are seeking to make a deal on oil output. So they're basically trying to create some sort of deal so they have so they know what the supply is. They're not trying to undercut each other, and that's what's currently happening. There's a huge amount of supply as well as the demand completely shutting off, really, in terms of what really drives the consumption of oil. And we'll see how it goes. We'll check the charts here very shortly, because that is some bullish news for oil, and obviously we see it act very favorably. But then also we did talk about a potential bottom that we saw at around $20 because of the flattening and the failure of the lower low to form, and then also breaking the descending zone. So first things first, let's go to gold. It is Friday, so we do have the weekend to look it over, and that's kind of why we don't do a global macro update on the weekend. So let's discuss the potential situation that we have for gold. Let's get our snip, which is right here. Let's see if we have any questions. Not yet. All right, so basically for the market structure, not much has changed since we've last spoken. We see that the price has made a high, a lower high, and we're still testing that lower high. We do have a resistance around 1675, around there. I think, no, not 1675 right there. 16, around 30-ish. We'll see where that is. 32, around there. That would be the resistance and the final resistance that we still need to break. We do see on the 1 hour chart we did crack that zone, but we came right back in. We got sucked back down below the resistance, and in my opinion we're still holding those lower highs there. And if we zoom into the 1 hour chart, there is that crack. So we do see a candle closure above that zone, but it got sucked right back into the resistance. And on the 4 hour it still hasn't closed. So yeah, well, it's closed, but it closed below. That's what I mean, like in terms of it never actually closed above the zone, indicating that these sellers still have control. We do have an ascending zone holding the higher lows, so it's just a matter if the price is going to break, and we'll be trading a potential move to the upside. But at the end of the day, because of the potential lower highs here, and also looking at the previous historic price action of gold when we were having our initial first, second, and third leg of the bear market in the stock market, gold didn't act really favorably. It was just acting very volatile, somewhat deflationary because it was creating lower lows and lower highs, but at the end of the day, it was not really at a point where you would want to long until the low of the stock market came in. So knowing that, obviously every bear market is different, but you gotta somewhat extract something from the past and then be able to use it in the upcoming future. So that is going to be my speculation. We're not going to get an instant increase in price of gold, or silver for that matter, and even Bitcoin. But it's when later, when you have the worry of inflation, that you see the huge price increase in gold, silver, and potentially cryptocurrencies. We haven't seen it in a recession yet, let alone a potential depression. So it will be very interesting to see how it'll all play out. So right now, because it's the weekend, we won't really see any price action for the next couple days, but we still are holding this level of resistance. We are getting a squeeze where we have a series of higher lows, and we have a high, a lower high, a lower high, a lower high. So we're really just squeezing in a symmetrical triangle here, and it's just a matter of if we're going to break to the upside or downside. If we do break to the upside, in my opinion, we will want to make sure that we're going to break this key level of resistance right here, because it could just be a little poke and a fake out, just so it gets some people to enter along, and then the people who were really looking and have the capital in the markets would dump it back down, and then obviously that would be a pretty good short opportunity if you're able to get that reversal when it comes back into the pattern, because obviously that'd be where a lot of stop losses would come into play for the longs. And then for the short side, we would need to see the price. We would need to see the price hold this level, creating a high, a lower high, lower high, lower high, and then we would need to see the price break this support zone, and then we have a previous key level of support, 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 and it turns into a resistance, turns into a support again, so that's a high probability that it might turn into a key level of resistance before we slam back down. I'm gonna get a little bit of coffee, and then we'll continue. All right, so let's just take away all the stuff and very, very simply, what we're looking for is if for a downside move, we're looking for a lower low and a lower high, and that would be our zone of confluence for a potential short. Very simple. And once that comes into play, we follow our trade plan. One thing to note, we actually see significant increasing buy pressure. Yes, we are seeing higher highs and higher lows, but it's actually quite significant of the amount of buy pressure we have compared to the reduced amount of sell pressure. So just looking at the volume, it does look like we have a higher probability breaking to the upside, but looking at the larger daily chart, looking like zooming out on the 4-hour, in my opinion, I think that we could see a potential failure of this ascending support, and then the price continuing to see this descending channel formation where we may get another lower low come in around 1550, which would be a key level of resistance and support in the previous price action. So it would not be surprising. I think that would be a pretty high probability situation if we do get the price to break this zone here, for the price to go around 1600 back to around 1550. In my opinion, a high probability situation to continue the descending trend like so, and then we might get a potential descending trend line somewhere around there that may connect a series of lower highs to get another squeeze, which may be a descending wedge. But for now, the trade of gold would be to see it potentially come back down from 1600 to around 1550. But if I don't see anything I like, I'm not going to enter. I'm in no rush at all. During these times, it's very volatile. There's a lot of big news events that happen, and you know, with quantitative easing in the mix, that just confuses a lot of people in terms of like, how do you value the US dollar if you you know, printed basically double the amount of circulation supply in a single year? Like, how do you value that really? And it's a difficult thing to value because it's a lot of just the psychology of the investors. How much do they value and have confidence in the US dollar? And over time, I do think that with rising prices, with the central banks continuing to print more money, the confidence will be slowly lost. You know, just thinking about it objectively, if you're losing your value quicker than you want, you're going to feel upset and you're going to look for alternatives. And if you see a mass psychological shift in an entire economy, that could lead to a huge shift in a transfer of wealth from one asset to another. So that is the potential for the long term, but in the short term, I do think that the US dollar still will have a decent amount of strength because, you know, as the world reserve currency, people are selling other assets, and you know, gold, silver, palladium, oil's all measured in dollars. Everything's measured in dollars. If they want to sell something, they have to go into dollars first, and yeah, that's going to be buying US dollars, which would then push the price of the US dollar up, which would then be obviously bearish for gold. So that's kind of what I'm thinking, and that's how I'm viewing the markets. You could get a little bit higher of a push here in terms of the descending zone. You could get a double top, kind of like we saw here. We saw a top, and then you did see an extension above the previous high, but you got a huge bearish candle, and then you see another little pop-up. Previous high is another high there. This is actually a nice head and shoulders, and then you get a push to the downside, making a lower low. You get a retest of the previous support as a new level of resistance. Really nice microstructure, and then you see a huge bearish candle to start the massive tumble to the downside. So, you know, we'll see how it goes. That's a really nice structure there, and we could find something similar like here, but at the end of the day, we did talk about what our plan is and what we were looking for within the 4-hour time frame mainly. So that's going to be the analysis for gold. We're now going to go to silver, and it's a very similar structure of what we're looking for here. We do see is this descending zone very, very well respected. Let's get our chart right here. And then this is the anchor point, and then we see our first touch and our second touch, and then now it's creating a zone of confluence at the around $15, $14.60 mark. We can see right around there. It was first initially a resistance, as we can see right there, as well as on the long-term time frame, on the weekly, it's a very significant zone, extremely significant. This $15, $14.50 range is extremely significant for silver. So we are right now, still holding it as a level of resistance, so we are looking for shorts, right? We tested this zone once before, which is this first test right here, and then now we're going for our second test, and it looks like it's failing, and we have our descending zone that creates extra pressure on this area for the bears to push and try to get that price to go below this ascending zone. And then also looking at market structure, very nice market structure right there. Key level of support, key level of resistance, key level of support. Once it breaks, in my opinion, that's a very nice double top structure where you have an ascending zone break as well, breaking market structure. Basically all the things are checking off in terms of a potential short for silver in the near term. So we'll see how it goes, but in my personal opinion, this does look pretty optimal for a potential short. We'll want to get a little bit of a move like this. That would be phenomenal. We do have the low right there at basically $12, and that would be a main take profit that you'd want to look at, because we see it respect not once but twice, 3 times, 4 times. Very well respected zone, basically at $12. So if you're looking at risk rewards, that's a phenomenal trade, and I do think it wouldn't be surprising if we just tested this low again, and then we'd be looking at the market in a consolidation phase where you have the $15 range as the key level of supply, and then you have the $12 range as the key level of demand, and then we're going to be looking to basically play within this range using key levels of descending and ascending zones to break down the potential ascending descending triangles. As long as they're very well respected, you have a pretty high probability of testing the high, if not pretty well close to it, so you'd maybe stagger your take profits, but that's a pretty dependable trade overall. Now, in that said, our overarching bias is a little bit more short in my personal opinion in terms of just silver, because we do see that this is a huge level of supply. In gold, it's more bullish. Gold, the key level is going to be the demand, and I'll actually talk about it. I'll talk about why in this video. The reason why we are more bearish on silver is, let's look at the weekly chart. And we can see right there, actually this is at the top there, but we can see, actually on the monthly, that might be better. There we go. Okay, so let's go like that and then get our snap. So why are we a little bit more bearish, right? So we got key levels of support, right? But we have this massive candle to the downside. And yes, it could hold, but at the end of the day, this zone right here, this zone right here, this wick right here, and we see this support right here is now below this zone. Now remember, key levels are zones, and just from the looks of it, the zone is kind of all the way up here, but the main reason is because right here, high, lower high, lower high, lower high, lower high, lower high, connect the lower highs, and you get a key level of descending resistance right here. And we can talk about that on the weekly, which is a little bit more easy to tell where that is. So if we go like this, let's get this trend line like so. Zoom all the way out. Oops. And that's the zone we're looking at. From basically August of 2013, we have a descending zone, let's color it red, that we are currently holding below. So if we take out, I guess, all of this stuff, so if we go here and take out that, we can see that this on the weekly chart with the anchor point all the way at 2013, and then we see some type Bs where you see candle closures right there, and also some wicks rejecting right off the zone. You see a wick rejecting right off the zone, you see a wick rejecting right off the zone. Maybe you could touch it just like that. And in my opinion, this is creating additional sell pressure because it slammed below the zone. It's holding there on the daily for sure, and now it's pulling back at the zone of confluence. And yes, this support is not perfect. It did pass the lowest point, but I'm viewing this zone as a pretty wide range right here because we've seen it respect all the way back here as a support, and throughout basically from 2014 all the way until 2019. That was a very strong level of support, but we slammed all the way below the zone, created a significant low below the support that we have here on the daily chart, and now it's pulling back, and that is why I'm more bearish on silver. And then for gold, if we take it all the way back, we see that it was a very strong level of resistance, different from silver, right? So silver on the weekly chart, we're seeing lower highs, right? Lower high, lower high, lower high, lower high, and we're holding a support. So it's a descending triangle. On gold, it's the opposite, where we have an ascending triangle, where we're holding higher lows in a horizontal zone. So it's a different structure in the price action. Silver is more bearish because the sellers are able to push the highs lower and lower and lower. Makes sense, right? They're driving it further and further into the ground until there's some level where they have to pick. It went right to the apex. Yes, it did push to the upside. We did get a strong bullish push, but you know, since March, since COVID, since this crazy volatile time, it's really taken a dive. There's been some very significant deflationary periods with basically all assets selling off and everyone wanted to go to the US dollar. And gold did that as well, but in terms of the structure of the market, gold is looking a lot better and overall more bullish compared to silver. Which makes sense because the gold and silver ratio is really at the highest point we've ever seen. I don't know if it's the highest point in history and time ever, but for decades and decades and decades, we've never seen the gold and silver ratio even close to this low. So it's definitely going to convert to more bearish sometime, but I think it will still continue to go up as silver looks more bearish and gold looks more bullish. The main topic of today, because of the fundamentals and just the sheer significance of the move, is going to be US oil. So let's go back to the 4-hour and take a snip. So after this drop, we've been basically covering this every single day, and it's been volatile, but man, that support bounce was huge. Didn't capture it. I can't say I traded this. I did not. I was just commentating. To be honest, I'm not a huge, crude oil trader. I don't know too much about the sector. I do like gold and silver trading a lot more, but crude oil I don't trade, or I just don't trade crude oil, and I haven't yet. I may start soon, but as of now, I do not trade crude oil, just saying. But I do love looking at charts and understanding how price action is is in a relationship with the fundamental news that comes out. And it's pretty crazy, right? Like, we've been talking about a potential reversal. We really have. Watch the previous global macro updates. We saw this huge bearish move right here, and that created the low of the potential support. And then we held a series of higher lows. We got a squeeze. We trickled down, and then we held the low again. We held the low, and then we held the low for the third time, creating 3 lows, significant zone, right? 3 zones, or 3 touches make it a potentially dependable zone, and the 4th touch makes it a dependable zone. So at this point, we have a horizontal zone. We initially had an ascending zone. So initially, this was the potential breakout. So we were looking, if it breaks the resistance here, we would look for a potential reversal. If it breaks a support, we would look for a potential short, right? That is how we would play this. And it went to the downside. That would be a good opportunity for a look for a short. Looking at what happened, previous levels of support equals new levels of resistance. Very, very well executed in terms of the market structure of the overall trade, or of the overall chart, sorry, not trade. So, you know, good to see, but at the end of the day, it was still bearish because it broke the support, and then we looked to the next level, which would be a horizontal zone, and if it breaks that, you'd look for a descending zone. But at this point in time, we saw not 1, 2, but also 3 touches, and then we saw it literally right to the apex of the zone. Couldn't get any tighter, and then we saw the bulls actually win, hold this support. They were able to hold it at that really exactly $20 range, and then we got first news of Trump potentially saying that they're going to have some discussion with OPEC and Russia, and that was after the breakout, which was, to me, very significant because it shows that the TA was, in my opinion, a front runner of the news, which is crazy. So we got our push to the upside. We didn't really break market structure until we broke around $22, and we'll discuss why right now. We see that it was a previous support right here, previous support right here, previous support right here, and it turns into a new level of resistance 2 times, actually 3 times here. So we can see now the consolidation is within this range until it breaks to the upside. So that is going to be the low of the market. If it didn't break that resistance there, that in my opinion would not have been a great potential long because we didn't break a market structure. Once we see this massive candle right there, that's a huge momentum shift and a market structure shift as well. And it validates the strength of this breaking to the upside. But what surprised me is, well, I think the fundamental factors have a lot to do with it as well, but the fact that we got really no pullback whatsoever. Usually in market pushes, we'll look at the S&P and we'll look at gold breakout too. It does do significant pushes, but we really didn't get any pullback here from the breakout zone. We did see this pullback here, which was like a little squeeze, and then it just shot up really right after, and then it was a level of resistance because we saw a key level of resistance right here, resistance, support, pretty significant zone. But yeah, after that bullish candle there, we just got a massive push to the upside. But I was potentially expecting some level of a pullback to around 22. That would have been for me a potential entry for me. Like I said, I haven't traded oil in the past, but I am looking to potentially trade oil using contract for differences or CFDs. You know, trading indexes, trading gold and silver, but this is another area that provides some opportunity, and I always cover oil anyways, and I have been able to follow the news and follow the fundamentals, and yeah, it's definitely providing some opportunities that I think are pretty valid. So I do want to get into it, and that's why we're covering more in our videos. So at this point in time, yeah, massive push to the upside. I think it's way late to enter long at this point. Plus, you're at a key level of support, resistance. It's going to be a key level of resistance right around $29, and we see it halt there right now. We did see the initial wick right here touch that zone, and then we see the candle closure at that zone as well. We'll see how it reacts over the weekend. There was some bullish news, and we see that there's a shit ton of buy volume coming into the market and really absolutely no amount of sell volume. So huge volume accumulation there. And our next zone is going to be around 34, 35. At that level, actually maybe 36 to 34. Around this zone of resistance. That's going to be the next area of supply. But we'll see how it reacts to this zone here, because we see it as a support and resistance back in early March. So I'm sure there's going to be some, excuse me, some level of a reaction at that zone, which we're currently at right now. So we'll see how it goes. If there's going to be some consolidation there, if we fall back down and form a series of higher lows, that could be a good opportunity. Something like this, and then if we form another higher high and then a higher low, that could be a good opportunity to potentially go long and then hit our next supply zone. If we do dip down and then potentially create a double top with a very bearish candle, very bearish candle, which is a bearish engulfing candle, or just a significant sell pressure that pushes the price down, and then you get a slow methodical pull up. You could draw a potential ascending trend line there, and that would be a good opportunity for a potential short, maybe as a reversal, because overall I do think the sentiment is still pretty bearish. You know, Trump has just been in discussions. There's no agreement, there's no bill, there's nothing passed, and it's just discussions, and that's all it is. So this news is just you know, fluff in the air. Nothing is settled, nothing is completed, nothing is cemented, so we have to acknowledge that. So that is going to be the commodities of the day. Alright, I'm going to get a little bit of coffee, and then we'll go into the indexes. We'll go into the S&P, and then we'll look at the US dollar index, and then we'll end it off basically there. There's nothing really to talk about other than that, in my personal opinion. I'm not going to talk about TVIX or anything. And I just like to trade the S&P for the indexes. All right, let's now go into first S&P. and then we'll go in, or the SPX you could say, and then we'll go into the dollar index. Not a huge amount to say on that. We're just looking at the weekly, really, nothing really to trade on there. So let's talk about this potential move that we're seeing here. Now, I know a lot of people are saying, oh, wow, it's very bearish, it makes sense, but in my personal view, I think we're actually going to pull back here, to be completely honest. Looking at the daily, this is a reverse head and shoulders. We can see this is the left shoulder, this is the head, and now we see the right shoulder come into play right here, and we see a high, lower high, lower high. And if we see a break in the squeeze in this descending triangle pattern, we could actually see a break to the upside, at least to 2600 and maybe even to 28. That is going to be my speculation, that we're actually going to go all the way to that zone, and then we're going to see a very well-drawn ascending zone, and that's going to be the zone to break that we're going to be looking to short. But yeah, a lot of people are bearish, but I am obviously very bearish in terms of the fundamentals, obviously. I do think that SPX is going to have at least another 30 to 40% drop for the second leg, and then we don't know how long the last leg is going to be. But look at the previous video for potential opportunities in the SPY. But as of right now, I think we will hold the $2,400 zone. We'll see how it goes, but in my personal view, I would not be surprised if we get a little bit of bullish pressure to push the price up. If we do break the $2,400 to the downside, not really going to be trading short just yet, because in my opinion, I don't really have much of an edge trading that. My edge would come into play if we do get another series of potential higher lows. That would be, for me, a really good opportunity to seize a high probability situation. So that's what I'm going to be looking for on the SPX. And then not much news on the US dollar index. Did get a little bit of bullish push here, but yeah, at the end of the day, we're still holding above 102. Or 103. So that's going to be the resistance that we're wanting to break. If we do see a break in a potential psychological zone, because this has been a key level in the past, so if we break above it, probably a pretty high chance that the US dollar is going to increase in price, or strength, which is also price. So that is going to be the global macro update for the day. We really hope you enjoyed the video. If you found this educational, if you found this informative, and you got some level of value from watching this, please subscribe. That would we would greatly appreciate it, and we can continue making these videos for you in the future. So thank you very much for watching, and until next time, happy trading.